the holdings in the strategy are really centered around a couple of key jurisdictions. So we have obviously a lot of investments in North America, Europe, UK, Australia, New Zealand. And what we're finding in those regions is that inflation continues to abate and it continues to decline. And in addition to that, what we're seeing is a large number of central banks are starting to come out and either reduce interest rates or indicate an intention, a signal their intention to reduce rates. Now, when we think about our view, interest rates from our perspective are probably, if anything, at the peak, and they're, if anything, likely to decline or go sideways from here. So not overly counter consensus, but I think the general view is probably reasonable. Now, if you step back for a second, you think about the impact of interest rates on infrastructure, what you generally find is that when you have periods of rising interest rates, generally infrastructure in the short term, the share prices come down off the back of that. We've seen a couple of events where rates have gone up. So this one goes back a way now, but you think about 2013, the taper tantrum. You think about 2016 when Trump came in and the resultant interest rate increase that happened off the back of that. What we saw is that infrastructure declined in those situations, typically by high single digits pretty quickly. Now, what we have experienced in the last few years, since 2022, is inflation has been up a lot compared to history. And we've seen, as a result, central banks increase interest rates rapidly to try to respond to that. And so what that has meant is, since about 2022, we've had a consistent headwind against the share price performance of infrastructure companies. And so as we think about how it looks going forward, if we expect interest rates, if anything, at a peak or declining from here, if interest rates are at a peak and they go sideways, I think infrastructure is well positioned to go back to delivering a CPI plus 5 type outcome. However, in a situation where interest rates actually are beginning to go down, that will likely benefit infrastructure companies. And we would expect in that environment, potentially you could outperform that expectation due to that environment.